Hi, this is Brent with Trade Therapy, and welcome to the Trading Couch. Let's talk Tesla. Tesla was part of our top-down analysis for our spotlight on Amazon last week, and we're talking about it today, not because it's breaking out, which it is today, but because of this consolidation pattern that Wall Street has created right here. They love to engineer these indecisive type patterns late in accumulation or reaccumulation structures to keep retail investors indecisive. Nobody's really feeling good about Tesla right now. The chart certainly isn't giving any indications which direction it's going to go in without deeper analysis. So Wall Street loves to create these situations, as we write about quite often. The big banks and Wall Street, their number one job when it comes to the market is deception. It is not analysis. It is not recommending fundamentals about organizations. They are looking to wrong foot the retail investment community. That's how they make their money. And right now they've created this indecisive asymmetrical triangle right here, which we looked at very closely on the daily. We talked about how it had been backtesting this 200 daily exponential moving average. It's flagging in a larger structure here. We talked about how volume was rising on the bottoms. And the last time we took a look at Tesla back in June, we talked about how before the big negative media campaign against Tesla and Elon, we talked about how volume went up at the highs, which indicates Wall Street is taking profit. So they took profit before the big negative campaign came out and everyone was keying Teslas and firebombing Tesla service centers, only to see Wall Street step back in at the bottoms and reload their positions. So we talked about that in June. We talked about how that leads us to believe that we're not going to see a deeper leg at that point, and we haven't seen a deeper leg develop. We've seen this series of higher highs and higher lows maintain its structure. The daily chart does present some interesting structural level opportunities if we see a liquidity run here. So we talked about all of those details in the trades that we're holding because we are long Tesla. We're long TSLA. We compared Tesla to the overall discretionary sector where we do see the possibility of weakness. We do see the possibility of a back test of this 200-day exponential moving average and a gap here that matches up with the 0.5 Fibonacci levels. So there's a lot of things within the sector that look like we might see a pullback, but we're not seeing those things in the Tesla chart. Of all of the charts we reviewed this week, Tesla was the strongest. We are seeing volume beginning to taper off, which does not indicate profit taking. We think Tesla does have the opportunity to sneak up on people, which is what Wall Street likes to do. Both Amazon and Tesla have been very quiet, while others within the Mag 7 have taken over a leadership role. We think there's an opportunity for both Tesla and Amazon to retake that position. If you want all these charts, if you want to learn about Elliott Wave theory, if you want to learn about Fibonacci and institutional strategy and how to trade it, we do this every week. Come join us over at Clarity. You'll see a coupon code come up in a second. That's all the time we've got for Tesla this week. We'll see you next week.